Good morning, good afternoon, good evening, and welcome to ioRadio with your host, Adam Smith. Today on the show is just me, and I'm going to be talking about another one of our infamous, stupid crypto talking points. This time it's going to be value. Is Bitcoin digital gold? That's what we're going to talk about. But before we get into that, let me bring you up to speed on what's been happening. Obviously, as I record this, we're at another kind of all-time high for Bitcoin. It's in the 94,000 range. And I was just going to say 94,000 tethers. I'm not going to price it in dollars because most of the trading activity associated with Bitcoin are stable coins that are being traded against it, not actual dollars. And this is something that we're going to get into later on in the show. It's important to note that when you hear the price of Bitcoin or any other crypto, it's being reported by a number of exchanges which are not in any way properly regulated like traditional brokerage houses that you might be familiar with when dealing with stocks. Most of these exchanges, even including Coinbase, they're largely located in shady areas. They're opaque, they're non-transparent. They don't have any oversight monitoring the trading activity, just deciding whether or not it's actually real. There's not really any kind of oversight there. So we're just dependent upon Kraken and Binance and Bitfinex and Coinbase telling us what the price is. Now, obviously, there has to be some actual real trading activity at these prices, or otherwise people would be complaining. So I'm not saying that if the price of Bitcoin is 94,000, that doesn't mean there aren't people out there that may be able to sell their Bitcoin at that price range. There probably is, but it just all depends upon how much liquidity is in any of these individual exchanges and how much of a bank run is made, which determines how stable the price is. And this is the problem. We really just don't know how much liquidity is in the market. So if you watched or listened to the previous episode where I talked about another crypto talking point about number go up, that's one of the big things that we talked about, is the whole concept of the price of crypto is more of an abstraction than anything else. We don't really know if the trading activity that has brought crypto to that price point that's being published, how much of it is real and how much of it is wash trading by arbitrage bots. Same situation applies right now. Obviously, crypto is in the news. The president, President-elect Trump has talked about it. RFK Jr. has talked about it. There have been a lot of prominent U.S. politicians that have been hyping it as in their quest to attract as many votes as possible leading up to the election, made all kinds of promises about Bitcoin and strategic reserves and all that. That remains to be seen if any of that's going to be done, because the president cannot unilaterally do that. We're talking about something that requires an act of Congress in terms of spending the nation's money. So, as usual, a lot of promises and claims made by higher up people, which has caused a lot of excitement in the market about Bitcoin and crypto. And there's a lot of people that really think this time it's going to go even higher. And those of us in the critical community, we have never said the price couldn't go up. What we do say is that inevitably it has to go down because the return model, the dynamic of what drives this market is unsustainable. It is technically a Ponzi scheme where all of the people that buy into it are paying off the people that bought into it earlier. And most importantly, before somebody says, well, the stock market is like that too, which it's not, crypto has no capability of creating value through any other means other than speculation, buying and selling. Whereas in the stock market, you're actually owning real-world companies that have assets that can create value through creating products and services, etc. Of course, all of this touches on various other crypto talking points, but on today's show, I'm going to talk about the concept of value. Is Bitcoin really valuable? And most importantly, is it a reliable long-term store of value, which so many proponents claim? That's the thing we're going to unpack. The crypto talking point that Bitcoin is digital gold. It's a long-term store of value. It's hard money. It's all of these kinds of things. But is it really, does it make sense to attribute value to an intangible digital asset? We're going to dive into that and we're going to talk about that. I'm going to pull up our crypto talking points on the ioRadio show. Now, the actual, this is my main published version here at ioRadio/i/crypto-talking-points. And so this is our official list of stupid crypto talking points. And we have 29 items in it. I'm not going in order because I kind of tend to pick things that might be topical at the time I'm recording a show. I don't know if I'll do 29 separate episodes. Some of them may not even be worthy of a single episode, but I've done one already on crypto talking point number 2, which is number go up, this notion that crypto is the best performing asset of the decade. Now we're going to skip all the way to crypto talking point number 10 because it's another major one, which is the concept of Bitcoin being a store of value and crypto is an investment. So we're going to talk about some of these basic points. So one of the first points that I want to make is crypto's value is unreliable. It goes up, it goes down. People will say over the long haul, it's basically gone up. But the truth of the matter is, since it's been considered an investment, is really only been in the last couple of years. Prior to that, for most of Bitcoin's history, it wasn't considered valuable at all. In fact, probably close to the first half of its life, Bitcoin was just an experiment. Now, it did have some traction in dark markets early on with Mt. Gox and stuff like that, and that's what kind of gave it its fuel, right? When a couple of dark markets that were dealing in drugs and hitmen and all kinds of other shady stuff started using Bitcoin as a way of payment, that drove a lot of interest in it, and the value started to go up. But even in the early days, there was manipulation there. But it was mainly used as an actual currency back then. That was its concept. It was being used to pay for illegal services. And then somewhere along the line, crypto as a currency, as a way to buy things, kind of failed. It's hard to say exactly when, but it was probably about the time when Steam decided they were going to accept crypto. I kind of feel that was the peak. In fact, let's look up and see when that was, when Steam, and this is the beauty of the internet, right? I could do some searching and say Steam accepts Bitcoin. And I'll probably, okay, this is good. It says that the news is Steam is no longer supporting Bitcoin. This is on DuckDuckGo. I wonder if I do that on Google, whether I'll get the original press release. Let's try that. Because one of the problems with crypto is you can Google just about anything and you'll get like an announcement of something happening. And you won't necessarily get the notion, the other thing where they stopped accepting it. I guess Steam has been responsible. Some of these companies that originally started to accept crypto, like IBM, have all their press releases announcing that they were involved in blockchain and crypto projects. And then when the projects get canceled, they still keep those pages up. So if you Google like IBM Trade Lens, you'll find press releases promoting this project. And then if you Google a little bit deeper, you'll find out the project's been shut down. Looks like Steam might have taken the pages offline where they initially announced it. So let's see what their press release says when they stopped. As of today, Steam will no longer be accepting Bitcoin as a payment method on our platform due to high fees and volatility in the value of Bitcoin. So this was December 6th, 2017. So I would say about the time Steam decided to accept Bitcoin was probably close to the peak of when it was being used as a currency. I'm not exactly sure when that was, but we know it was discontinued December 6, 2017. So maybe, I don't know, a year, maybe two before then. So probably between 2015 and 2017 was the height of the period when there were a lot of companies out there. Bitcoin was becoming kind of popular, and they started trying to endorse and accept Bitcoin. Of course, the value was all over the place, and as a result, it just became too chaotic to try to support this thing. So you can see we've seen an increase in the volatility in the value of Bitcoin and a significant increase in fees to process transactions on the Bitcoin network. For example, transaction fees that are charged to a customer by the Bitcoin network have skyrocketed this year, topping out at close to $20 a transaction last week, compared to roughly 20 cents when we initially enabled Bitcoin. Unfortunately, Valve has no control over the fee. These fees result in unreasonably high costs for purchasing games when paying with Bitcoin. The high transaction fees cause even greater problems when the value of Bitcoin itself drops dramatically. So obviously, it became impractical to use it as a payment method. In the case of Steam, since Steam might have a game that you could buy for $5, if there's a $20 transaction fee, it's just absurd. And this is the problem that's built into crypto and blockchain, is that you never really know how much it's going to cost to get this transaction going, because it's a sliding scale based on how much activity and congestion there is. If there's too many people trying to use the network, the fees go up. So this is a problem. This is why Bitcoin failed as a currency, and it has never recovered since then. There may technically be more places accept Bitcoin today in 2024 than there was maybe in 2017, although I'm not even sure of that. But I guarantee you that it's not significantly more. Bitcoin has primarily been abandoned as a currency and rebranded as, quote, digital gold. Since it is highly volatile and highly speculative and it's failed as a currency, bag holders decided, well, we can't lose everything. Let's rebrand it. So now it became digital gold. Now it became an investment. Now it became a commodity or a security, depending upon who you're asking. So at best, Bitcoin is a speculative commodity at this point. Not everybody attributes value to it, and this is just a fact of life. 99.99% of things that you or I pay for in the real world, we cannot use Bitcoin for. So the notion that crypto has value in a real world context is extremely soft. And so this is what we call extrinsic value versus intrinsic value. Intrinsic value is something that holds value regardless of whether people believe in it. Water has intrinsic value. Whether you like water, whether you believe in water is irrelevant. It still has functional things that are objectively valuable to many, many people in many situations. Bitcoin, on the other hand, has no objective value. If I explained to somebody who didn't know about Bitcoin what it was, they wouldn't have any good reason to attribute value to it. You have to basically be indoctrinated into it. And this is probably the fundamental weakness with Bitcoin and its perception of value, is that it is wholly extrinsic. It is wholly subjective. And I could replace Bitcoin with SafeMoon or Doge or CumRocket or any other token or any other arbitrary thing. And if you can't immediately see the value in it, it's probably not particularly valuable across a larger area like different cultures and different time periods and things like that. And so this is the main base. Everything that we typically attribute long-term value has usually a combination of both intrinsic and extrinsic value. And in my documentary, I talk about this. I talk about the fact that water can have both intrinsic and extrinsic value. Obviously, water, everybody needs it to survive. But if you do enough advertising for, say, a particular brand of water, that brand of water can also have added extrinsic value because it's trendy, because it's cool, because it's packaged in a cool bottle, because there's a lot of commercials and pretty girls are drinking it, or it's got some weird thing added to it that people think is going to make them smarter or whatever. You know, that's all the extrinsic thing. There may be some intrinsic elements to some of that, but that's what gives value to things. And of course, crypto people talk about, you know, when the world ends, Bitcoin is going to be really, really valuable. But Bitcoin is not going to fuel your car. Bitcoin can't be burned at night to keep you warm. You know, it's hard to see this abstract digital token actually having long-term value or value across a wide variety of different cultures and scenarios. Now, it does now, but the main reason for that is just because there's a common denominator among all of the cultures and areas that Bitcoin is perceived as value, and that's that they all kind of come together over the internet. If the internet wasn't around, Bitcoin would have absolutely no value to anybody, and nobody would even know about it. And as I've said before, crypto is typically just too chaotic to be a reliable store of value. Now, people will say, well, it's the best performing asset of the decade. But again, you can't really take the first half of Bitcoin's life when it wasn't perceived as any kind of a store of value. That's often by accident and through some very specific situations where you had dark markets and you had manipulation. There's evidence that Bitcoin was manipulated in its first run from $10 up to $100. And there's more evidence that it was also manipulated from $100 up to $1,000 by different bots in different scenarios. And if you look at my talking points, I will have links to those articles. And I'm going to play a clip from my documentary about this digital gold thing. It's not too long, and I think this is very helpful here. So let's just let this guy roll, because it gets into the digital gold element that I was talking about.
Crypto is an investment.
Does crypto make sense as an investment? Is it a hedge against collapsing economies? What makes it valuable? When Bitcoin was first conceived, it was meant as a digital currency. In fact, a digital micropayment system. Its developers never imagined that it would be hoarded as an investment. This flies in the face of its design as a way to transfer value. Currencies only work if they are spent, not saved. Bitcoin's fixed amount of tokens was meant to ensure the value couldn't be diluted. Not so much that it would end up being highly scarce and super valuable. That narrative is a relatively new invention that didn't surface until many years after its creation, when adoption as a currency failed and bag holders needed a new scheme to create more interest to keep the value from collapsing. And virtually every crypto spin-off since panders to this basic objective. Buy, don't sell, get rich later. But is that rational? Today, people compare crypto to gold, suggesting it's a precious thing that's rare and will only perpetually increase in value. Unfortunately, not only is there no guarantee that will happen, there's also not a single precedent in all of human history that suggests something like cryptocurrency will maintain long-term value. This is something I really do want to talk about. I have racked my brain for the longest time to try to find an analogy to Bitcoin, right? Bitcoin is an abstraction that has no intrinsic value. You can't hold it. But people claim that it will be a long-term store of value across different cultures and across different long time periods. And so I'm thinking to myself, if there is actually, if this is possible, surely there should be a precedent in human history of something like this, some kind of abstraction that has no intrinsic value, that for some reason continues to be believed to have value across different cultures. And I have searched and searched and searched. I have racked my brain trying to come up with any kind of a precedent in all of human history for anything that comes close to the concept of Bitcoin. And in this respect, Bitcoin is truly unique, I think. Although, from another perspective, maybe it isn't, because if you compare Bitcoin to things of value, you can't find anything to compare it to. But if you compare Bitcoin to schemes, to concepts and constructs that people throughout history have been hoodwinked into buying into, then there has plenty of other examples of things similar. But I can't think of any kind of abstract thing that really has no intrinsic value that people attribute value to. The closest I could come to would be like astrology, which astrology is kind of like a concept that people attribute value that has lasted for millennia. But then again, it does have some value in that it seeks to try to explain to less developed people what's going on in the sky, and it tries to attribute meaning to the sky, and that could be a way of helping people give meaning to their lives or reduce stress by believing that the stars represent something that was looking over them. Same thing with religion. Religion could be kind of an abstract thing that there's not a lot of material evidence that it delivers anything useful for society, but it still carries on. But the problem with religion is that religion is often a product of central entities and control. Religion would not flourish in a truly decentralized manner without some kind of overseer or institutions pushing it. Whereas Bitcoin and crypto are, it was created by a particular person, but now nobody controls it. So it's just a whole bunch of individuals. It's like a lot of little schemes. So this is the thing. I am trying to steelman the crypto bros argument that this is a long-term store of value. And my feeling is if that's rational, we should see some example in history of some other concept, something that really didn't have a whole lot of value that people just continued to attribute great value. Superstition has carried on without being controlled necessarily by any central entities, but it's an abstraction. I can't find anything. So if you've got some ideas, let me know. Leave a comment in the YouTube video comments or elsewhere, because I have not been able to find any kind of analogy that works. The only things that I can compare Bitcoin to that are similar in construct are other Ponzi schemes or other scams or other things, fads, but they never lasted very long. So I just don't know. Let me know what you think. Okay, we'll continue with this. Gold is an element and has a plethora of industrial and material uses. It's conductive but corrosion resistant, making it a very useful material in electronic components. It's also very shiny and malleable and has been used to make both functional and desirable items for thousands of years. Gold has stood the test of time, proving that it can maintain long-term value over time and different cultures due to its tangible material benefits. Now, crypto bro people will argue gold is overvalued based on its intrinsic value and material use. That's one of the comments when we say, well, gold has intrinsic value, and they will say, well, gold is overvalued. I would argue, and I think I do in the video, if gold was truly overvalued as based on its intrinsic value, that it wouldn't be used intrinsically. It wouldn't be used industrially. It wouldn't be used in things if it was too expensive, but it is. So I think its value is obviously a combination of different use cases for it. Some of them may be ornamental. Some of them may be cultural. Some of them may be industrial and the use of the thing materially based on its elemental properties. But it's still used. You could argue that it's overvalued, but it's people continue to pay for that. See, that same argument you could say to Bitcoin, but Bitcoin doesn't have any use. So all it has driving it is hype. Crypto and blockchain have no such qualities. Crypto is an intangible digital asset. It has no intrinsic value. It has no material use. It exclusively exists as some bits of data in a distributed database that is powered by random people who are at best temporarily motivated to maintain these databases. There is no guarantee tomorrow the Bitcoin blockchain will remain online. There are thousands of cryptocurrencies that no longer exist because there's not enough interest in operating their blockchain software. The same could happen to Bitcoin or any other crypto. This isn't to say crypto has no value. Obviously, to some, it has great value, but this is called extrinsic value, which is different from intrinsic value. Value is a function of supply and demand. If you have demand, then you have value. If supply is limited, then value increases. But limited supply with limited demand results in little to no value. Now, some people have criticized that what I call value is more the price. I don't know. Maybe I could have tweaked that section of the documentary a little bit more, but I think it still holds up. Let me know what you think. Demand is the key component that gives things value, not scarcity. But not all demand is equal. There are two distinct types of demand. There is demand because of an inherent need, which exists regardless of popularity, and then there's demand which is a function of popularity. The former is intrinsic, the latter is extrinsic. Take water, for example. This commodity has significant intrinsic value. It's required for all agriculture. People need water to survive, so its value isn't dependent upon what people think of it. It provides an undeniable use regardless. These types of commodities are also a great hedge against other market forces because no matter what happens, people will always need water. Crypto, on the other hand, has no material use. It only has value if you can convince someone else it does. I want to talk about this. So another new argument that I've been pulling out a lot lately when people talk about Bitcoin's proliferation and how it's being used more and more all around the world, because of course, the main crypto bro argument that comes up in this value proposition thing that we're debating right now is another crypto bro talking point, which is endorsements. They will say, oh, well, Trump wouldn't be talking about a strategic reserve, or BlackRock wouldn't be doing ETFs, or, the SEC wouldn't have approved an ETF if it wasn't valuable. And again, I think that's misleading because what we have here are mostly entities that are taking advantage of popularity for one reason or another. BlackRock is not necessarily going all in on Bitcoin. Bitcoin is just another commodity to them that they can monetize and make money on fees. Same thing with, PayPal and any of these other companies that are adding crypto to their stable of different products and services that they offer their customers. It's just another way for corporations to make money based on something that's popular. It does not mean they believe Bitcoin has value. They just recognize it's popular at this point. They can take advantage of it. They actually have a fiduciary duty to do that if they can. That doesn't mean that it has long-term value. And I often point to, the fact that McDonald's bundled Beanie Babies with their Happy Meals when Beanie Babies were very, very popular, and everybody made a fortune. McDonald's and the Thai company that produced Beanie Babies made a fortune over that. And now Beanie Babies are worth, and all of those Beanie Babies now that were bundled with Happy Meals are largely worthless. And, that doesn't mean McDonald's really thought Beanie Babies were a store of value or an investment. They just recognized it as a fad. All of crypto's supposed value is extrinsic. This also explains why crypto is not a hedge against inflation or other market forces. It has no additional utility during times of crisis. You can argue fiat is also exclusively based on extrinsic value, and that would be correct, but fiat wasn't created to be a commodity or an investment. It was created to be used as a temporary transfer of value. Hoarding fiat as an investment is not a good idea either. But more importantly, not all extrinsic value is equal. The extrinsic value attributed to fiat is a function of the state, the government. Its popularity is mandated by law, by the same institutions that provide you fresh water, roads, schools, and many other critical services. These same institutions also guarantee and enforce private property rights. So if you are worried the fiat system is going to collapse, note that in order for that to happen, the entire government would need to collapse. And in that case, the value of $1 would be the least of your worries. You'd also have no reliable utilities or anybody to defend your right to own your own home. Yeah, this is a common thing. When you say, well, Bitcoin has no intrinsic value, they'll say, well, the US dollar has no intrinsic value as well. And that is true, except that the extrinsic value that's driving either one of these commodities or securities is completely different. What gives Bitcoin value is marketing propaganda. If you aren't constantly told Bitcoin is awesome, to the moon, hodl, diamond hands, you wouldn't know what to do with it, right? You can't, it has no other real utility other than that. And the main driving force behind your excitement over Bitcoin is whatever propaganda and news and marketing you hear. This is why when things are happening in the news, like Trump mentions Bitcoin, the price goes up, because that is the driving metric behind the price of it, right? Whereas with fiat, what's guaranteeing it is the nation state that you live in, the same entity that gives you running water and personal property rights and the internet and electricity and all of that. And so for the dollar to collapse, the whole economy would have to collapse. And at that point, really dollars are not the least of your worries. Electricity and whether or not somebody's going to show up with a gun and take your house probably take precedent over that. So crypto bros kind of are very disingenuous when they suggest that crypto is just like fiat and that neither one of them has intrinsic value. But the extrinsic value is significantly different. You have a guarantee of the reliability of fiat from the same entity that makes sure that if your house catches fire, somebody will try to put it out. You have nothing like that with Bitcoin. So when crypto people celebrate their so-called hedge against the collapse of modern society, they naively expect everything except for fiat to magically keep working, which is absurd. So, if you want to believe crypto is digital gold and a good investment, that's your prerogative. But note that there is no evidence anything of this nature whose value is wholly extrinsic and whose popularity is a function of random people who put their own needs above the greater good would hold any long-term value. Crypto is not a hedge against inflation. It's not a hedge against traditional economies or market forces. It has no added benefit when other things go wrong. Now, I say there, crypto is not a hedge against inflation, and I don't really have any citations on this, but this is a metric that you can, or a claim that you can absolutely prove. The price of crypto goes up and down with surges in popularity, and it also goes up and down with the status of the economy. You know, crypto will go up during COVID when after the stimulus checks come out and people have nothing to do but to do weird things with their money. But in a general sense, if the economy is hurting and people have less money, you're not going to see more people put money into crypto. You're not going to see crypto increase in value because you can't eat with crypto. You can't put fuel in your car with crypto. So this notion that if the price of everything else goes up, it can hedge against that. There's absolutely no guarantee, and there's very little evidence that it reliably could do that. This is something that is easily provable if you do a reasonable amount of research. It has no use other than something to be tossed like a hot potato to the next greater fool. Caveat emptor. So there you have it. There's our section on is crypto digital gold. I don't really have a whole lot really to add to it. I think it still holds up a couple of years later after I did it. And I hate to say, but the arguments countering this are really, really lame. If they're mostly whataboutisms, where they'll say, stocks are the same thing. Stocks don't have, stocks are speculative, and fiat has no intrinsic value either. It's all, almost every argument to the value proposition critique of crypto is involved in an appeal to hypocrisy or two wrongs make a right. Well, the same is right with this other thing, which is a distraction. So again, how do you know anybody will care about crypto 5 years from now? I mean, how do you really know? You don't know. Everybody is just hopeful that that's going to be the case. And the problem is it just doesn't compute. So beyond the notion that there's not a lot of evidence that crypto is a long-term store of value or that it's digital gold or that it will make a good investment, obviously there's still a lot of people out there that believe in that. And I've tried to kind of rack my brain and understand where they're coming from. And I have a number of different theories that make sense to me. And one of them is the fact that I'm older and I am of a generation that grew up without the internet. And there's a lot of younger generations that never grew up without having the internet around. I grew up when there wasn't computers around. I actually got into computers when they were mainframes, and teletype terminals and punched cards and stuff like that. I was very, very young, but I did get a taste of the original kind of computing like that. And I was around from the birth of the PC when there was a TRS-80 and the Apple and all of that. And my first computer was a TRS-80 Model 3. Long before the internet came around, long before there was even telecom networks. I was around when the internet came about, and in the early days of the internet, it was completely different than what it was now. But you have at least two entire generations of people that have grown up always having what is effectively the sum total of all human knowledge in their fingertips. And that's a weird thing, right? When that becomes your source of information, and it can tell you really amazing, informative stuff, but it can also tell you all kinds of crazy shit. And I think that may play a role into this. Also, that when I was growing up, our games were very, very primitive. I mean, I grew up in the arcade era playing Pac-Man and, Asteroids and Joust and Robotron and then pinball machines and stuff like that. Our games were fairly simple. They weren't super sophisticated. And we spent a lot of time trying to master them. We weren't overloaded, and these things weren't so addictive that they became little worlds that we lost ourselves into. If I had the kind of game like I got into EverQuest when I was in my I don't remember how old I was, but I got into EverQuest when it was around, and it sucked the life out of me. If that had happened to me when I was younger, like World of Warcraft, if I'd had World of Warcraft when I was a teen, who knows how lesser developed I would have been, how less I would have known about the dynamics of what makes the world work, because I would have been introduced to a whole fantasy world that had a completely different set of rules, and I would have really liked it. I mean, let's face it, those things are addictive. And I look at crypto almost as like an MMORPG. It's just this massive ecosystem that has its own sets of rules, just like any game that has its own monetary system where you grind and grind for jewels or gold pieces or whatever. I look at crypto and I look at it as something that is part of a little isolated ecosystem. I don't look at it as the real world. But then again, I didn't grow up where my world was a virtual world. And I think there is a lot of younger generations that haven't yet, realized there's a hard boundary there between their perception of a virtual world and the real world. And I think it kind of has creeped into their outlook on life and society, and especially the economics, right? For example, if you poke your head out in the real world, it's a lot different than it is in a virtual world. In a virtual world, in order to level up, you just keep doing the same thing over and over. The game will not let you go nowhere, usually. Because these games are designed to keep you incentivized. So even if you're banging it against the same thing, at some point you will level up. It might be slower, but you will still get somewhere. Whereas in the real world, you can often do the wrong thing and continue to get nowhere. And so, the real world doesn't have loot crates that pop up. Well, it kind of does, but in a different way, right? In the real world, our loot crates are the opportunities that we make through contacts and connections. But in the virtual world, the loot crates are the result of usually a particular quest or following a very sequential series of events that are often laid out. You walk into a room and something is vibrating or blinking, that's what you need to go to. And in the real world, you don't have those kinds of hints. And I think maybe some of these younger generations look at crypto as a game, as a real game. Like, if I just keep pumping into this and putting into it, eventually it'll level up and I'll get my jewels or whatever. I struggle. I just struggle to find why they don't understand this thing has no actual utility, but they still attribute value to it. And I guess I could see the rationale if they look at the whole world as a game too. As the world is a game where you're a shitty player, but Bitcoin is a game where it's much more clear how to play it. And most people assume if I just keep playing because the rules are pretty well established, buy and hold, that I can get to the end, I can level up. I don't know, but I somehow suspect there's part of that dynamic in there. Let me know what you think. We're getting into the realm of philosophy, but when you try to understand why somebody would attribute such great value to something that literally can't do hardly anything in the real world, you got to start deviating. You got to start going into the abstract and the philosophical realm and try to figure out what's in some of these people's heads. And I understand there's also just this general cynicism of society, right? Of the government, and everything is so divisive, and you see all these people that are profiting by just exclusively representing their own interests, and you think, well, if they're doing it, I might as well do it. And Bitcoin is another great example of that. Just you don't really care if other people get defrauded as long as you can come out ahead. And there's plenty of aspects where you see that in the real world, and you see people getting value at the expense of others, and you think, well, I might as well do it too. And again, it could be also having to do with this, that we're in kind of late stage capitalism where selfishness is considered a virtue because it drives the need to buy more, to have more, which keeps the corporate consumer machine going. And it all plays into that. Again, let me know what you think, but I'm just trying to kind of understand things a little bit better. But, for now, there is a difference between the real world and the world of crypto. And, as I say, one of the big things, if you think Bitcoin doesn't have a whole lot of value, imagine this. Imagine tomorrow every cryptocurrency on the planet instantly disappeared and became valueless. What would happen in the real world? Would anybody really notice other than a few crypto people? Would the electricity stop working? Would your TV stop working? Would your healthcare disappear? Would you lose your job? Most people would not be affected at all if crypto went to zero. And, that's something to think about. So I guess I'll wrap that up here. Thanks, everybody, for watching and listening. It's been a really kind of a rough week with the price of Bitcoin peaking and so many trolls coming into the various social media communities and just attacking us, saying the same things over and over and over. But you know how it goes. If you know somebody that would like to be on the show, or you'd like to be on the show and talk about things, send an email to adam@ioradio.org and let's talk. I am open to debating crypto with anybody. So until next time,